Pratap here. Today is the 3rd March 2024. In this video, let us generate Nifty and Bank Nifty supply demand zone chain. So with the help of the supply demand zone chain, we will be able to identify the support and resistance zones within the Nifty and Bank Nifty. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So at our NeoStock YouTube channel, at home page, scroll down to the playlist supply demand zone price action course. Click on this playlist, you will be able to access all the training lessons. I have also provided the link to this playlist in this YouTube video description. Click on the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in the Telegram channel. It will be useful to you. Each time when we release a new video, we will be providing an update to you, and that will be helpful to you. Now let's get into analysis of a Nifty and Bank Nifty supply demand zone chain. Last week, I have generated the supply demand zone chains, but I analyzed Nifty live charts and I gave you an exercise for doing Bank Nifty. This week, let us do the reverse. I will analyze Bank Nifty charts with the help of the supply demand zone chain, and after that you have to do the exercise for Nifty for finding its support and resistance levels. So Bank Nifty, let us start our analysis from monthly time frame. So for monthly time frame, I am generating supply demand zone chain for Nifty Bank, that is nothing but Bank Nifty. And this process takes a little extra time. Yeah, we got the report. Bank Nifty is not having any supply zones. So the first one, the demand zone, whatever you are seeing, this is the all-time high demand zone. So let us draw this demand zone. This is the first August 2023, 3 base candles, then leg out. So let me go to, I am changing the time frame to monthly time frame. Yeah, this is the August 2023 candle. This is a medium size leg candle. This is a drop candle. After that, 3 base candles. This is a medium size candle. And even though these two are looking like medium size leg candles, but after the base candles they are coming, they can be part of the zone. Until there is a leg out, you can consider medium size candles, you can consider as part of the base if there is a base candle before that. I told you this point earlier and I am repeating because it is an important concept. So now let us draw the monthly zone. Let me change the color to monthly demand zone. Okay. If you look into this drop base rally, this is having a monthly EMA confluence. This monthly demand zone is having monthly EMA confluence. This is one important observation you should make. Okay, now let us shift to weekly time frame and let us try to find the weekly demand zones and supply zones. So let me go back and I am changing the time frame to weekly and I am generating supply demand zone chain. This is the costliest operation, taking time. Okay, here we have only one supply zone is available. And after that we have a demand zone. This is a high liquidity demand zone. The immediate demand zone is high liquidity demand zone. And we have a supply zone which is already tested twice. So when is the supply zone? 26/12/2023, 2 base candles. Yeah, this is the leg-in. We have two base candles and then we have a drop candle, follow through candle, and reached the monthly demand zone, and then from here it got the support. So this is a weekly supply zone. Let me change the color. Okay, now prices are Nifty is inside the weekly supply zone. I mean, not Nifty, Bank Nifty. Bank Nifty is inside the weekly supply zone. So what about the demand zone? We have a high liquidity demand zone. Tested once. When it is generated on 30, 10, 20, 23, three base candles. 30, 10. This is the one. 30 October 2023. We have three base candles. Let us draw the zone. This is a demand zone. Weekly demand zone. See, it just reached the weekly demand zone and then started move, and again it reached the supply zone. So the move is completed. How much time it took? It took 5 weekly candles. Almost a month or a little over a month time it took to reach the weekly supply zone. And this is a high liquidity demand zone weekly. So for our remembering purpose, let us add the text. So this is a weekly HLQ zone, high liquidity zone. Weekly high liquidity demand zone. And this weekly high liquidity demand zone is inside monthly high liquidity demand zone. Sorry, monthly demand zone, not high liquidity demand zone, monthly demand zone. Monthly demand zone is a normal demand zone, this one. And this is weekly supply zone. Okay. Now what is the next step? So this is a high liquidity zone. Probably this will act as a strong support, and maybe it is not easy to go below this weekly demand zone. Did I say supply zone? Sorry, this is a weekly demand zone. So this is a weekly high liquidity demand zone. It is very hard to break this zone. That means this is going to act as a strong support for Bank Nifty. This point is very clear. Going below this high liquidity zone is not easy during this week. Maybe it might be violated after some time, I am not saying that. But it is not easy. At least this week we can say. You may ask a question, are you going to give guarantee? Nobody can give guarantee, but there are higher chances. This is a probability game. Whichever is having the highest probability, we have to bet on that. That's it. Always we bet on high liquidity zones because their probability levels are high. If something wrong happens during the next week, throughout the worldwide, all of a sudden all conditions are changed, then this zone will be violated easily. But in normal situations, it is not easy to violate this weekly zone. This is if any case, if prices come down, again it will push the prices up. At least for this weak point of view, there are higher chances. That is what I am trying to say. So now we have identified a strong support for Nifty, I mean Bank Nifty. Please correct me if I am saying Nifty. You know, when I involve too much in the explanation, sometimes my mouth will slip and I may say instead of demand zone, I may say supply zone. Or instead of bank nifty, I may say nifty. So please correct me. I'm assuming whoever is listening these videos, you're already having some experience. So any mistakes from my due to some slippage from my mouth, please kindly excuse. Okay, this is the strong support. That is what we identified. Next, lower levels we need to identify. So what is the lower level? Daily. The next level is daily. So let us identify the daily zones and daily high liquidity zones. So going back and changing the time frame to daily, and I am generating the chain for daily. So we need to wait for a few seconds. Okay, now daily supply demand zone chain is generated. Currently, daily time frame, it is having 3 supply zones. We have one high liquidity supply zone is there, that is the counter trend trading point of view. This is a high liquidity zone. And the fifth, we have a high liquidity demand zone, and it is a fresh zone. And immediate demand and supply zones also there on daily time frame. One is a fresh zone, that is demand zone. Supply zone is already tested once. And also there are 2 rejections. So maybe rejections always indicates a strong order flow. So let us draw immediate demand zone and supply zones in Bank Nifty. First let us draw immediate demand zone. That is the 28th February, 1 base candle. Yeah, this is a drop base rally, 28th February. So let us draw this zone. I am drawing the zones from week to week, please observe. But when you are trading, when you are planning your trade, you have to minimize the risk. Either fine tuning the zone or maybe type 2 entry or type 3 entry. That is up to you. So this is a daily demand zone. I am changing the color. This is the immediate demand zone. And this demand zone is there at the weekly level. Then where is the high liquidity zone, daily high liquidity zone? The one below. Let us draw even that zone. But before that, let me give the name. This is the daily DZ. Because of these names, usually you will understand this is a high liquidity zone or a normal zone, you will understand. Let us draw high liquidity zones. From now onwards, high liquidity zones plays the major role during during this coming week. Maybe prices may go down up to this level. So when is this high liquidity zone? 1711, 2023. Where is 1711? Yeah, this is the one. This is not a base candle. There is a gap, hidden body. So inside weekly high liquidity zone, we have 1, 2, 3, 4, 5, 6. This is the one we are drawing, daily high liquidity. So that means the daily high liquidity is in confluence with the weekly high liquidity. See, it's a powerful. And moreover, there is a pro gap from here. So daily HLQ demand zone. This daily HLQ demand zone is inside weekly high liquidity demand zone. So this is excellent. We have 2 demand zones, daily zones we have drawn. This is the immediate daily demand zone at this point of time. And if this is violated, definitely Nifty will get support within this weekly area. We have a daily high liquidity demand zone. Here we have the real order flow. And also look into this, the daily high liquidity demand zone, why it is so powerful. There is a pro gap, a small pro gap. Okay, fine. Next, what do you have to do? Supply zone. We need to draw the supply zone. Here we have 2 supply zones. One is the normal supply zone and another one is the counter trend trade setup, high liquidity supply zone. So let us draw the immediate supply zone first. When it is 4/1/2024, one base candle. So again is 4/1. When is 4/1? This is the one, 4/1. We have a rally, base, drop. So let me draw the zone. This is a daily supply zone. So where is the high liquidity zone? This is 15/1. 15/1 and one base candle. This is the one, 15/1, one base candle and a drop with a pro gap, a huge pro gap. And this is LOTL concept. This is LOTL. This is a daily high liquidity supply zone. And also it is LOTL zone. Because this is a high liquidity zone, even the original zone, LOTL also, you can consider this is entire thing is a high liquidity area, but more liquidity will be there inside this. And moreover, prices came down. So this is daily supply zone. So these zones, both these zones are supporting now together as LOTL, level on the top of the level. Okay, now what could be the range now next week? We can expect a range from here to here. Let me draw that info lines. This is the first range. Let me draw distal line to distal line, D to D range, so that you understand in a much better way. Instead of a proximal line to proximal, let me draw, because prices may go inside. Maybe there could be fine-tuned area, from there it get the support. But this is the maximum range. So that means Nifty is having 2,700 points. Range is there, approximately 2000. I am using round value. Actually, it is 2721. Approximately 2,700 range you can expect in the week, coming week. But if this demand zone is violated, this is a normal demand zone. But the real range is from here to here. Let me draw the real range, that is high liquidity zone to high liquidity zone. This is a D to D range, a distal line to distal line. How many points? 5,000 points, 5,172. So approximately round value I am saying 5,000 points range is there. Bank Nifty is having 500 points range during next week. So we can't expect beyond this. If at all anything possible, if this high liquidity supply zone is violated, Bank Nifty will get a new all-time high. But is it easy? We don't know how strong the supply zone is going to be. Once we get into 5 minutes time frames, we will get clarity based on the order flows at 5 minutes level or 15 minutes level. Okay, now we did our analysis on daily. Now let's go to 125 minutes. So let us analyze in 125 minutes. I'm changing the time frame to 125 minutes. Mostly 125 minutes, 75 minutes. You see, very close to each other they are. We have immediate high liquidity, supply zone is there, immediate high liquidity demand zone is there. That means currently Nifty is going to move between high liquidity demand zone and high liquidity supply zone. Already this demand zone is tested. When it is tested during last week, even 75 minutes also the same. Last week we generated this. Not only here, even our stocks near demand and supply zones, 75 minutes high liquidity supply zone generated, I think last Thursday if I am not wrong. Is it Wednesday or Thursday? Yeah, last Wednesday it is generated. Thursday we got a trade. Because I was not available last Wednesday. Came very late on Thursday. So by the time I send you the reports, the trade has been finished. But I already gave you this list in Nifty and Bank Nifty. Those who did your exercise during last week, you would have got a very good trade on Thursday, which has given nearly 9,000 rupees profit during the intraday in Bank Nifty. Around close to 9%, if I am not wrong, close to 9% ROA it has given during the intraday, that high liquidity. That is the power of the high liquidity. So these are the two immediate high liquidity demand and supply zones at 125. Mostly 75 also will get the same. Because we are tracking high liquidity zones in daily and 75, but this is 125 minutes. So what is this zone? 25th January at 9:15 candle, one base candle. 25-1, 9:15. This is the demand zone, 25-1, 9:15. So this is the one, drop base rally. This is 125 minutes demand zone. Sorry, this is 125 minutes high liquidity demand zone, HLQ. This is not the one I am telling. This was given on 12th February, this entry. Probably the one I was talking is on 75. Probably it could be somewhere here. Okay, this is a 125 minutes high liquidity demand zone. Then what about 125 minutes high liquidity supply zone? This is on 16th January 9:15, two base candles. 16 January 9:15. So this is the one. 16 January 9:15. And these two are the base candles. So that means almost the entire zone is also acting as the same entire zone, daily high liquidity zone. So what I do, instead of drawing again. So I'm adding the text 125 min, comma, daily high liquidity supply zone. So that means this is acting as a both 125 minutes and daily. Okay. So that means this is the same range, almost the same range. But only difference you have seen is because this is at the proximal, the range will slightly vary from here. But this is the superset, and from here to here the subset. That way we can treat. So let me draw. So there is nothing wrong in drawing the lines. Range. This is a distal line to distal line range by using info line. I'm drawing, this is 125 minutes range. From here to here. Okay. This is 125 minutes range. That means Nifty mostly during this week within this level. In case this 125 minutes demand zone is violated, below again we have daily high liquidity zone. They are very close each other. So next let us go to the 75 minutes time frame. So I am going back, changing the time frame to 75 minutes. Let me generate the report. Yeah, here we have high liquidity demand zone, immediate demand zone, the fifth one. And again, third one, again we have 75 minutes high liquidity supply zone. Fourth, we have a supply zone. This is a normal one. So where is this fifth one? Probably this is the one we got the trade, the fifth one. This is 14/2/2014 at 11:45, one base candle. 14th February, 11:45. Not this one. Yes, this is the one. This is the one we got the trade. When we got on Thursday? Yes, see here. This is reached on Thursday. Thursday, this was the trade I was referring earlier. Bank Nifty came here, and from here during the intraday, it has given around 9% ROI it has given until it reaches to the next 15 minutes level. Somewhere here. Those who holded the position, see further again, some more it has given. Extraordinary profit. Intraday itself we thought it is extraordinary. If those who holded this position, see how much profit it would have given. But anyway, this is a 75 minutes high liquidity zone. "75 minutes HLQ demand zone." Probably on Monday, we can expect up to 70. Prices may not go below this 75 minutes demand zone. Maybe this could be the range for Friday and Tuesday. Mostly. See here, unless this 75 minutes zone is violated, it can't reach the 125 minutes high liquidity zone. Unless this 125 minutes high liquidity zone is violated, it can't reach the daily high liquidity zone. That way you have to understand what is my immediate support. Your immediate support is this 75 minutes. It need not be 75. Once we go to 15 minutes, 15 minutes high liquidity zone might act as our immediate zone. Let us assume somewhere a little higher 15 minutes is there. So at least on Monday it will hold the prices. So that is the way you will identify your immediate. And higher the time frame that zone is having, higher the capacity to hold the prices for more days. That is what you have to understand. Okay, this is 75 minutes high liquidity demand zone. What about supply zones? Immediately 75 minutes we have a normal supply zone is there. Let us draw this, but 15 minutes onwards, let us focus on only high liquidity zones. The fourth one is a normal supply zone, that is 17,1,915. Sorry, 16,1,915 candle. 16,1 here. 16,1,915. The same. That means we need not draw. This is again acting as 75 minutes also. Same zone is acting as a 75 minutes, same zone is acting as. But this 16,1, 4 base candles and 17,1, this is not a high liquidity zone. This is a normal supply zone. But what about the next one? When it is 29,12, 29,12, 215. Let us look into that. 29,12, 215. So this is the one. 29,1, 215. This is the 75 minutes high liquidity zone. We have 4 base candles and a drop candle when? That is 1st January 1415. Let us check. Yeah, 1st January 1415. This is the 75 minutes high liquidity zone. See, this is again having confluence with this one. See, everything is drawn from here. That means this entire area, lot of high liquidity is there. This is the area. The real supply is there. That's why we should be very careful when prices enter into that area. This is 125 minutes, 75 minutes supply zone, high liquidity supply zone. 75 minute supply zone. So this is the one actually holding the prices. And here we have the real order flow. Here again and again, new zones are created at different time frames. Daily it is created. Again, 75 minutes it is 75 minutes normal zone. 125 minutes it is created. So we have to give importance to this area. So let us write this as a 75 minutes high liquidity supply zone. And what I do, I just delete the name 75 in here, because it is part of it is LOTL. This 75 minutes and this 75 minutes inside, both are LOTL. That's why I'm ignoring that. Let us focus on this high liquidity. Moreover, you have to understand the entire high liquidity is within this area. In daily time frame, 75 minutes time frame, even 125 minutes time frame, everything is here only. So that means you need to change the range a little above here, up to here. That is up to all-time high. This is the range. You have to mark your range up to here. Okay, now 75 minutes is completed. Now we will move on to next 15 minutes. Sorry, 25 minutes. Generating demand and supply zone for 25 minutes. Here again we have immediate 25 minutes demand zone is a high liquidity demand zone. The third one in this list. What is the leg in? 1-3-2024, 11:20. 5 candles. Where is 1-3? This is supply area, right? Why it is showing demand? Sorry, I'm seeing 1-1. Sorry for my mistake. This is 1-3. 1-3 means recently. Last Friday. So let me change the time frame. I didn't change the time frame, sorry. This is 1-3. 1-3, 11:20 candle. This is the candle. After that, how many base candles? 1, 2, 3, 4, 5 base candles. There is a candle, it considered as a leg candle, this one. Software consider this as a leg candle. It's not a leg out candle. So that's why all these candles are part of the base. This is a 25-minute zone. But this 25-minute zone is at the supply, near the supply, within the supply area. So you should be careful with these high liquidity zones. It works. I'm not saying maybe during intraday level it will work. "25 minutes demand zone." For time being, I'm giving 125 minutes color only. This is a 25 minutes high liquidity zone. So 25 minutes high liquidity demand zone. Probably these levels will play on Monday. Either 15 minutes or 25 minutes. They are the immediate support. High liquidity zones are immediate support during intraday on Monday. If these levels are broken, then next it will get support here in this area, the 75 minutes high liquidity area. Okay, this is a 25 minutes high liquidity demand zone immediately available. And what about supply zones? Here we have high liquidity supply zone at 5-1. Probably both are at the same level. See here 48,182, 48,344. Okay, let us focus on this. This is a confirmation trading related zones. Because you are not aware of these concepts, let's ignore time being. Let us focus on this. So when is this 15-1? Not 15, sorry. 5th January, 940 candle. After that, one base candle. 5th January, 940. This is 5th January in this area. $940. This is the candle, and this is 25 minutes high liquidity. See here, the entire liquidity is there in this area. This is the main area. But what we are doing is further fine tuning this zone. See, already tested here, this area, and then came down. Finally, you may say 15 minutes, 5 minutes, everything in this area only. So that means according to the 25 minutes, this is the range. If you draw, probably this could be your Monday's range. But let me draw up to this all-time high level, because there the real 75 minutes supply zone is there. Actually, that is the main reason behind this entire high liquidity. The 75 minutes area is the main reason. There again and again, even daily is also created within that area only. High liquidity, what happens? Institutions create new zones again and again in that area. And you have seen from daily to 25 minutes level, they created there only so far. Even 5 minutes, 25, 15 minutes also you may see within this area. But what timing for Monday, this could be the range. This could be your Monday's range. If this is violated, suppose maybe it might happen. Monday itself, this 25 minute zone might be violated. If this is violated, this is going to be the next range. Let us assume due to any reason this high liquidity supply zone is violated, either on Monday or next week, due to any reason. Maybe it's not easy, I'm just telling you. Then Nifty will get all-time high. Probably it will be flying from here once this area is broken in case during this week. I'm just telling you hypothetical scenarios. In case if that breaks, what will happen, I'm just telling you. Okay, this is a 25 minutes range. Now let's move on to 15 minutes range. 15 minutes, 25 minutes, both probably they are similar. Same level you will be seeing. So I'm changing the time frame to 15 minutes. I'm generating the chain. Look into the 15 minutes high liquidity supply zones here. This is a pierced supply zone. We don't care about this. What is the next 15 minutes high liquidity? Let us focus on them. The 8th and 9th. See, 8th already held it 3 times. And the 9th one, the high liquidity zone, that is support demand zone. Tested once, but see the rejections 4 times from this zone, having a lot of liquidity. So let us focus on 8th zone and the 9th zone. I'm not saying these demand zones doesn't work, the 5th, 6th, 7th. They will also work, they also might work. See, the 6th one already worked once and 2 rejections. Maybe there is also some good order flow is there. But our high liquidity zones are the real strong areas. At least our Monday or Tuesday, these levels will work. So when is the 8th one? 14 to 115, 3 base candles. 14th February, 115. Where is 14th February? Yeah, here. So within this 75 minutes area, already we have 75 minutes high liquidity. The fine-tuned area, these are all fine-tuned. Let me see the login when it is given, 14th February, 115. Some mistake. So I'm sorry, I didn't change the time frame. Now I'm changing the time frame to 15 minutes. So this is 14th February 115, and here we have two base candles, but it is showing three base candles. 14th February 115, three base candles. When is the leg out? 215 is the leg out. Yeah, this is the leg out. Actually, this is also a leg out, but why this is not considered is, let me tell you. Is it 15 minutes? Yes, 15 minutes. This is also 15 minutes. The C underscore DZ is on 14th February 115. Three base candles, 14th February 215. This is the 215 candle. Actually, this is a leg out. I don't know why. Maybe. Let me draw like this. This is the 1 minute. This is the leg out. This is the follow through candle. But this entire leg candle, it is considered part of the base. Maybe something wrong. But anyway, let's ignore the software point of view, what it is suggested. And this is 15 minutes demand zone. 125 minutes, 15 minutes demand zone. This is a 15 minutes high liquidity demand zone. This is a 15 minutes high liquidity demand zone. That is what we have seen. And the next one is the ninth one. That is 12/2/2024 215. 12th February at 12:45. 12th February 12:45. This is the one inside this. These four base candles. This is inside 125 minutes high liquidity demand zone. This is the fine tuned area. See here, previously it got support from here. Prices didn't go inside 125 minutes high liquidity zone. The 15 minutes itself holded the price. The next retracement. And from here the prices moved. This is how high liquidity zones they work. Okay. Something I missed. Text. I didn't add the text. So this is a 15 minutes HLQ zone. So this is 15 minutes high liquidity demand zone. This is what we have added. And what is the most recent zone? That is 1-3 at 12:30. 1-3. The most demand zone is 1-3 12:30. So here we have a zone inside this 25 minutes area. So basically when you fine tune inside 25, these zones, these immediate zones are there. But one zone is having order flow, some rejections are there. Let us focus on this demand zone. Because this point, the rejections made me some interest on this. Even though this is a normal zone, who knows, maybe in future this may be a new high liquidity zone. I'm just telling you. But some rejections always an interesting area we should observe. So this is also 1-3, but 9:30, 6 candles are there. 1-3, 9:30. Are we seeing the right one? Sorry, this is 11:45. I'm seeing the wrong one. 1-3, 11:45, 4 base candles. This is the one. Four base candles and a rally. And this is and here some interesting. This is a why it is interesting, let me tell you. But first let me add the text. This is a 15 minutes demand zone. Why I am showing interest? This entire 25 minutes is a high liquidity zone, but the real order is within this 15 minutes demand zone. See, from here it is picking the orders. See here, it picked the orders and again it picked the orders and went up. So probably here a strong order flow is there. Probably Monday, unless this order flow is violated, Bank Nifty will hold the prices at this level. It has to consume. If Monday supply should be very strong and it should be good enough to consume this entire strong order flow in this area. Then only this zone will be violated. Otherwise, maybe this level might hold the prices on Monday or maybe even Tuesday, who knows. But at least Monday's point of view, let us think this is very close to the current price. It might hold the prices unless Monday's supply is very strong. If Monday's supply is very strong, this zone will be violated and finally it went up to this demand zone, daily demand zone. But this is a normal demand zone. Just below this daily demand zone, we have 75 minutes high liquidity order flow is there inside this. And observe carefully. This 15 minutes high liquidity demand zone inside 75 minutes demand zone will act as a bear trap for this daily demand zone. But this is a normal daily demand zone. Some people who take trades in the daily demand zone, if this is violated, they will exit. But here below that there is the real order flow is there. Maybe it could be a trap. This 15 minutes high liquidity demand zone is a trap. It is a bear trap. Sorry, not bear trap, bull trap. Bear trap, not bull trap. It is a bear trap only. I'm sorry. Because the short orders, when you want to exit, stop loss orders are short orders. Shorts will be captured by these bulls. So this is a bull trap. Okay. So this is about 15 minutes demand zone area. But what about supply? The high liquidity supply. This is a pierced zone, we don't care. And this is the resistance supply zone. We have two high liquidity zones are there. And what is their levels, price levels? 48049, 48220. So let us draw these zones. This is 16-1, 16th January, 215. After that, 4 base candles. 16th January means somewhere here, within this area. Yeah, here, 16th January, 215. You have 4 base candles. That means this is the area. See, this entire area is supply. So that's why I don't want to further make any changes. But if you want, for the risk point of view, if you want to do something for your trades, see, this is a drop and 3 base candles. First, let me draw for our reference point of view. This is 15-minute supply zone. This is not a 15-minute supply zone. This is a 15 minutes high liquidity supply zone, HLQ supply zone. Okay, this is the one. What is the next one? Just a little above that. There is one more high liquidity. That is the 5th January, 9:15, 4 base candles. 5th January means probably this could be here, somewhere here. 5th January, not here. This is 1st January, 14:15. This is a normal zone only. This is a normal 15-minute zone. Then where is 5th January? Somewhere here. Yeah. This is the one. We have a ERC candle here. That could be the leg-in, 9:15. 5th January, 9:15 is the leg-in. And we have 4 base candles. 1, 2, 3, 4. Then we have a leg out. So within this 25 minutes high liquidity, the same thing is acting as 15 minutes. That's what I told you earlier. Mostly 25 minutes and 15 minutes, they almost will be similar. So let me add the text 15 min, comma, 25 min high liquidity supply zone. Because the entire same 25 minutes is occupied by 15. But what is the difference? Maybe if you look into 25 minutes, maybe you might be having 2 or 3 base candles. Here 4 base candles you have. That is the only difference. But the entire zone is same. See what happens here if this high liquidity is violated. The next high liquidity, just a little above, orders will be picked up from there. These 15 minutes level, 5 minutes levels are useful for intraday traders or even short-term traders. So this is about 15 minutes and the last time frame is 5 minutes. So let me change the time frame to 5 minutes. Let us generate the chain. Okay, we got it. Now we will look into only high liquidity zones from this side. We have a supply zone. The immediate high liquidity, so we have only one high liquidity supply zone is available at 5 minutes point of view. 5 minutes point of view. That is the 4th one. It is already tested 6 times and 10 rejections. 21 times price closed inside this zone. So it's holding the prices. So what is this high liquidity 5 minute supply zone where it is? This is again 5th one, 10, 15 candle. 5th January 10:15, the supply zone, high liquidity supply zone. 5th already we have seen somewhere here, right? Yeah. So let me change the time frame to 5 minutes. This is 5th January is here. It is within this 15 minutes and 25 minutes area only. But only thing is, this is just reducing the risk. Instead of this entire thing, the real order flow we are seeing. So let us draw the real order flow for your reference point of view. But remember, you have to consider this entire area. But 5 minutes will be helpful to you for your intraday trading point of view. So when it is 5th 10:15 candle is the leg in. After that, 4 base candles. 5th January 10:15. This is the one. This ERC candle is the leg. These 4 base candles. So let us draw the zone within this area. This is the actual order flow at 5 minutes level. Supply zone. And let me add the text. This is a 5 minutes high liquidity zone. So this is the real order flow in this area. It doesn't mean there are no orders above that. Might be there. Here also see rally and 3 base candles, 1, 2, 3, 4 base candles, and again a ERC candle here. But ERC candle is not really great here. If it would have been closed a little bit, we would have considered this. But anyway, here we have, and it holded the prices several times. See, this is the first time. And again, this is the second time. See, after that, prices are within this area. But again, rally base drop created within this. That is the real, real characteristics of a high liquidity zone. Within the high liquidity zone, again and again, new zones will be created. Either within the same time frame or lower time frame. If you look into 1 minute, you get more clarity here. But we are not getting into that level, 1 minute level. Each time if you go to 1 minute level, unnecessarily lot of, I forgot the technical word. Yeah, whipsaws. You will be seeing a lot of whipsaws there. That's the problem. But here we have the real order flow. And also created a new zone. After that again prices came down. Probably this week the prices may enter into that area. Okay, that is the only one high liquidity supply zone we have. I think probably this is when 28/12. We have one more supply zone. This is a confirmation trading point of view, but time being we are leaving them. And what is the demand zones, high liquidity demand zones? 9th one. That is 1/3/2024. 1st March, 2 o'clock 5 minutes, 3 base candles. 1st March, is it somewhere here? Yeah, 1st March. What is the timings? 1st March, 14/5. So this rally base rally, it is saying this is a 5 minutes high liquidity zone. Let us see Monday this is going to hold the prices. In case if it fails below, we have 15 minutes zone that will hold the prices. We have 25, inside 25, 15 minutes. This is 5 min now. 5 min means 5 minutes. High liquidity demand zone. But don't forget, this 5 minutes high liquidity demand zone is there inside the supply area, supply zone. This is seller's area. Seller's area, generally the supply will be very strong. But how much time it is going to hold is only for maybe a few hours during the intraday. It can't hold for a long period. You can't expect that. Maybe if its lifetime is only few hours during the intraday. That's it. You should not forget that point. Don't expect wonders from these 5 minutes high liquidity zones. They do create wonders, but it has a limited lifetime. That point you should not forget. And the 15 minutes also same limited lifetime, but compare it to 5 minutes a little better. That way you have to understand. When the time frames are increasing, then the real power you can see. This is the 5 minutes high liquidity demand zone. This is the immediately available 5 minutes high liquidity demand zone. And it is already tested once and 2 rejections are there from here. These 2 rejections. This is the first rejection, this is the second. That means order flow is very strong here within this area. That is what it is confirming. If Monday, if the supply is very strong, easily this 5 minute zone will be violated. That possibility is also there. The next one is 11th. The 11th one in this list. High liquidity 5 minutes demand zone already tested 2 times and 5 rejections are there. It looks like a very strong high liquidity zone. Candles never closed inside. If candles never closed inside means it's not letting the prices go. The moment prices are coming, it is just pushing. When it is created, 1st March at 11:25, one base candle. First March 11:25. So here, this is within this, what is this zone? The 15 minutes demand zone. This 15 minutes demand zone is not the high liquidity zone, but we have shown some interest on this because it is holding the prices. Actually, the reason is not this 15 minutes demand zone. The reason is this 5 minutes demand zone. Let me delete this 15 minutes demand zone and let me draw this 5 minutes demand zone. This is the main reason behind those strong order flow here. So let me add the text. This is 5 minutes high liquidity zone. See how the orders, how it is holding the prices from this. Actually, orders are picked up from this 5 minute zone. From here, from here. 3 times rejections. Prices came, see went up. Prices came, again went up. Came here, again went up. After that, eventually the price moved up further. So here this is the real order flow. The 5 minutes high liquidity is the real reason. Earlier we drawn 15 minutes, that is a normal demand zone. But why we have shown the interest is rejections from that 15 minutes area. But actually this 5 minutes is the real reason, which is a high liquidity zone. Probably Monday you may see some support from this high liquidity. If supply is very strong, maybe you may see some support from this area, this 5-minute zone area. For this entire 25 minutes high liquidity demand zone, this is the main reason where the supply, where the order flow is started. Actually, it is supplying the demand from this area. Let me use the word instead of supplying, let me say providing. This is the zone providing the demand, the 5 minutes high liquidity. So that means strong order flow is there in this 5 minutes high liquidity. The first one, I don't know how strong it is going to be, but here we have the second one, 5 minutes, we have strong order flow. And look into the remaining 5-minute zones and you can draw, because there are many 5 minutes you will get within this area. Sorry, Control Z. Yeah. So look into this. For your reference purpose, I am scrolling down in case if you want to see zones even below this. I think this list could be good enough for you. So this is about Bank Nifty, supply demand zone chain, and these will be our orders. Let me show you from daily time frame point of view so that we get clarity. Changing to daily time frame. Let me zoom. See, this is what we are expecting. This is for this entire week. This is the entire range for the entire week. Maybe next 2 weeks also, who knows? For next 2 weeks also, this could be the range, who knows? But at least for the next week, this could be the range, entire area. So probably on Monday, this is the initial one. This 5 minutes, the second 5 minutes within the 25-minute zone, the whatever the 5 minutes high liquidity, from there to this supply zone, Monday the Bank Nifty movement will be there. In case if the supply is very strong and pushing the prices, this is the next support. We have a 75 minutes high liquidity zone. Inside we have 15 minutes high liquidity zone, this area. If these levels are broken, and probably it gets the support from here and even below, we have a daily high liquidity zone. And moreover, here we have a weekly zone. Inside weekly we have all these are all high liquidity zones. Similarly, here also we have a weekly zone. Inside weekly we have this daily area. So exactly the same way you have to, please do the exercise for Nifty. Already last week I have explained in Nifty, but the levels are changed because Nifty reached all-time high during the last Friday and Saturday. I will be showing you only the zones, but you have to do the analysis on the charts exactly the same way, how I did. That is the exercise for you. Those who wants to become a good Nifty and Bank Nifty traders, you must do the exercise. That way only you get best profits in our trading. So let me change to Nifty. I'm going back. So this is Nifty 50. So let me start from monthly time frame. Already you have seen monthly, there is no much difference for monthly and weekly, but still, let me give you the list. These are the monthly zones. So let me go back, changing the time frame to weekly, and I am generating the weekly report. I am not discussing anything or not commenting anything, just showing you the zones. These are the weekly zones. The most nearest is at 1900 level. 1900, 875. So let me go back. I'm changing the time frame to daily. From here, probably you should concentrate. Because last week means this completed week, a new demand zone is created. See here on 28 February 1st. So there is a drop base rally we have seen on the Nifty chart. So based on this, your entire analysis will change. And this is not the nearest high liquidity zone because it is already pierced. If a zone is pierced, you have to ignore that zone. You have only at 6th high liquidity zone is there. That is at 20,158 level. That means Nifty has to down by at least 2,000 points to get into that level. So that's why focus on 125 and 75 minutes time frames to find the real supports during this week. So I'm showing you 125 minutes report. Look how many seconds it is taking. Okay. So this is the 125 minutes zones. The third one is the nearest high liquidity zone. That is at 21,953 level. So you need to pause the video and you have to study because I'm giving you very less time. So I'm going back. Now I am generating 75 minute zones, supply demand zone chain. If you observe, there are no supply zones at all because the Nifty is closed near the all-time high. Probably you may find zones only, supply zones only 15 minutes or 5 minutes, but not below that. I mean, not above that. We have all these are all high liquidity, demand zones. And third one is high liquidity demand zone. That is the same thing, 21,953, what you have seen for 125 minutes time frame. That's why people follow mostly either as a 125 or 25 minutes. Rarely you see difference between 125 and 25 minutes. Okay, let's go back. Changing the time frame to 25 minutes and I am generating the report. And also 25 and 15 minute zones will be correlated. They could be almost similar. So here you have two high liquidity zones. No, third one you can't consider, it is already pierced. The second one, this is at 22,222 level. This is a 25 minutes zones. Always keep an eye on this column, pierced count. Pierced count is not 0, you should not consider that zone. So let me go back. Now I am changing 25 minutes to 15 minutes and generating the chain. These are the 15 minute zones. 15 minutes also there is no supply zone. All are demand zones and the first one and second one both are high liquidity zones. Probably tomorrow's trading these zones might play an important role. Focus on these 1 and 2 entries in this. 21,922, 21,686. These are the zone highs. So these are the 15 minute zones. So let me go back and I am generating 5 minute zones. And finally we got even 5 minutes also there is no supply zone. It's because Nifty is at all-time high, closed near to the all-time high. That's why 5 minutes. No supplies. Without supplies, we cannot tell how market is going to be. It is not easy to predict the market movement. So I should be careful. The first high liquidity zone. But remember, C underscore DZ is having not so great. Compare it to S underscore DZ. Time frames daily and below time frames. You should not forget that point. C underscore DZ works, but it's not as strong as S underscore DZ. And this is at 22,000. Probably this is a zone inside a 25 minutes time frame zone. This could be the area the order flow has started. Okay. So please do this exercise. I gave you the complete list. Now on the charts you have to practice and do. If you don't spend your time, you never improve your subject. Remember, if you are asking me to analyze the charts, I am getting the experience, but not you. If you really want to get the experience, you have to draw on the charts. I'm giving you the data. Whatever software is generating, I am giving you the data. Your time is already saved. At least you have to drawing the zones and predicting the levels. Your mind should at least tune to that level. You should tune your mind at least to that level. Software made your job easier for finding high liquidity zones, demand zones or supply zones. After that, by using this information, you have to make your brain finding the real support and levels with your one. See, whatever I did, do the same thing. But if you are lazy, you know what happens? Your brain will stop working. It won't be active. Never make your brain lazy. Always make it active. Once it is active, you get a lot of money. Trust me. So this is about Nifty and Bank Nifty supply demand zone chain. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.